Hello traders, Gary Wagner here. Right around 10:45 in Honolulu, 4:45 in New York. It is Tuesday, 16th day of October 2018, and this is the Daily Report for gold and silver. We do have gold trading fractionally lower on the day, currently down about $2.70 to $2.90 and fixed at $12.2750. That is a net decline of about 0.25%. Silver down a little bit more than that, about 0.4% at $14.67 after we subtract a 5-cent decline in pricing today. Palladium also tracking about 0.5% lower, $10.73. That's down $5.20. And lastly, platinum futures down about 0.25% or $2, currently at $8.44. Now, slight dollar strength is providing a little bit of a headwinds for the precious metals markets, but not really all that much. Currently, only a 4-point change in the dollar index to the plus side, currently fixed at 94.79. However, it was the incredibly strong risk-on environment from a 500-plus point day in the Dow Jones Industrial Average that has put some downside pressure on the precious metal. That risk-on market sentiment prevalent today with gains of over 2% in the Dow. S&P also gaining over 2% at 2809, and the Nasdaq Composite gaining almost 3% on the day at 7645. Although gold is trading fractionally lower on the day, currently down $2.40, we have seen a pretty resilient rally and a pretty resilient effort to hold on to recent gains over the last couple of trading days, considering that the last 6 consecutive trading days have all contained higher lows than the previous low, and that even goes back to Monday of last week. All of these days contained higher lows than the previous day. For the most part, they all contain higher highs. We currently see some strong support right at the 0.618% retracement level. We talked about this for quite some time yesterday because we can absolutely confirm that this particular price point was a very supportive area of gold pricing back in July and August prior to the fall to the lows achieved this year, and that would be this low right here at approximately 1167. From there, it converted from being a level of support to a level of resistance, because once we reached this yearly low here, on 3 occasions the market attempted to challenge the resistance area at 1217, all of it ineffective. We had then one more little spurt to the upside, which came as high as 1210, so shy of that mark, and that was all up until Thursday, because Thursday's $30 day took pricing first above the key psychological level at 1200 and also above the 50-day moving average, as well as the 0.618% retracement, all in one swoop. Then on Friday, it gave back marginally, but most impressive about Friday's move, as well as today and yesterday, is it has remained above this effective support level, 1217.60. Now, today we had a slightly lower high, but nonetheless, we closed right in the area that we saw the market trade to yesterday. So we realized that while we had a very strong risk on market sentiment due to a very strong stock market today, we didn't see any kind of major sell in the precious metals markets. And so for that reason, I believe that they have held quite effectively. So traders, the key to the future direction of gold is going to be based upon a couple of different outside influences. First of all, equity strength or weakness will greatly contribute to selling pressure or buying opportunities in gold pricing. We absolutely saw the market meltdown last week when on Wednesday and Thursday we had these massive declines, an 800-point day followed by a 500-point decline. And in 2 days, we broke through the 200-day, the 100 and 50-day moving average. Now, over the last couple of trading days, meaning Friday, as well as yesterday's trading, we have seen the equity stage a slight recovery, although trading a little bit lower on the day when compared to the open. It did close in higher ground on Friday and slightly lower yesterday, but today we saw a dynamic gain of 547 points. And that, of course, brings into question whether or not we will see that risk on market sentiment, which has been so overwhelmingly present, return as a major feature in the disposition of traders. The other thing that we need to look at, of course, is tomorrow's FOMC meeting minutes being released, and that, of course, is from the September FOMC meeting, and most importantly, that is where they had a rate hike. The question on investors' and traders' mind is to be whether or not there's any indication that can be gleaned from the minutes that will determine how hard-pressed the Fed is to implement a fourth rate hike this year. If they are bringing into question market fluctuations or market-sensitive data as determining what they're going to do, or whether or not it's pretty much a done deal. I believe it is going to be data dependent. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.